On to 2025 we go, coming off another solid year in the S&P 500. However, a new year brings new challenges, and traditionally, January is a decent month for the S&P 500. But after that, we often face a bit of turbulence from a seasonality perspective in February. Do me a huge favor. Show your appreciation by simply clicking the like button down below, subscribing to the channel, and let's jump into another video. As always, I'm not a financial advisor, so please do not take this as financial advice. Now, let's get back to the video. In the vast realm of telecommunications, Globalstar Inc. has carved a niche as a provider of satellite-based services. Born in the mid-90s, this Louisiana-based company journeyed through the evolution of technology, focusing its resources on ensuring connectivity where terrestrial systems falter. The company generates its revenue through various channels, providing satellite data services to governments, corporations, and individuals, as well as offering subscription-based plans that leverage its expansive satellite network. Here are some of the most important ratios and metrics. Revenue indicates the total income generated from normal business operations. Growing revenue signals business expansion. Earnings before interest and taxes, EBIT, a measure of a company's profitability from operations, excluding interest and tax expenses. It helps assess operational efficiency. Net profit margin, net income divided by revenue. This shows how much profit a company makes for every dollar of revenue. Gross margin, gross profit divided by revenue. A higher gross margin suggests strong pricing power or efficient production. Operating margin, operating income divided by revenue. It indicates how well the company is managing its operations and controlling costs. Return on assets, ROA, net income divided by total assets. This ratio measures how efficiently a company uses its assets to generate profits. Return on equity, ROE, net income divided by shareholders' equity. It shows how well the company generates profits from its equity investments. Current ratio, current assets divided by current liabilities. It evaluates a company's ability to cover short-term obligations with its short-term assets. Quick ratio, similar to the current ratio, but excludes inventory from assets, a more conservative measure of liquidity. Debt-to-equity ratio, total liabilities divided by shareholder equity. It shows the balance between debt and equity in financing the company's operations. Market capitalization, the total market value of a company's outstanding shares. It gives an overall idea of the company's size. Price to earnings, PE ratio, market price per share divided by earnings per share. It helps determine if a stock is overvalued or undervalued compared to its earnings. Price to book, PB ratio, market price per share divided by book value per share. It compares the market value to the company's net asset value. Free cash flow, FCF, cash generated by the company after spending on capital expenditures. It shows the cash available for dividends, debt repayment, or reinvestment.